Chase Wilsey.
Yes.
With Wilsey Asset Management.
Oh, okay.
And of course, his father, Brent, has been on the program a number of times. Very similar businesses we do. You are cutting your teeth in the world of investment advisement, right?
That's correct.
And did I hear you going for your master's or something? What are you doing now? You're going back to school for something?
Yeah, I'm going for my master's right now. Just finished my first semester, finished my first session of summer school. So
wow,
almost about halfway there.
And his biggest, I don't know if it's frustrating, but I would say one of the hills you climb every day is to tell your friends they should be investing.
I mean, it should be simple knowledge because you say, okay, you start saving now. 50 years from now, you're gonna have a ton of money. But they don't look at it that way.
But you have also seen my illustration.
Oh yeah.
Of $5 a day.
Yeah.
I call it a Slim Jim and a Red Bull a day. Started now.
Starbucks coffee is another one.
Starbucks coffee. Well, you've heard of latte factor and stuff like that. But I think if you put it in those terms, sometimes and look at there's a million ways to do it. You can I mean, there's 100 ways to skin a cat. But I mean, if you really put it in terms of it's $5 out of your pocket every day. It's nothing.
Yeah.
Okay. And that turns into a significant amount of money. Now, let's talk about some of the challenges because millennials aren't investing mainly because they're afraid of what they saw. They've got that faded hope and change poster in their room that they thought, and their parents' wealth got cut back by 40%. Now most of it's back and more now if they stayed in the market.
Yeah.
But what's the lesson you can tell those guys because a lot of them are just scared, Chase?
Yeah, and I mean you got to look at the long term. I mean, 2008, 2009, yes, it was rough times, and I mean, I was too young to actually start investing then. But I mean, you look at before the Great Recession and after the Great Recession, 5-7 years. If you actually invested during the downfall, you'd be so much farther ahead than those people that pulled out before and were too scared to get back in over the last 6-7 years.
You know what's scary about this is if you had missed just the last 12 days, the last 12 up days. Since 2006, in the last 10 years, if you missed the last 12 up days since 2006, your returns would have been 8% versus 11%. What does that tell you? It tells you have to have money at risk, right?
Yeah, and I mean, our big philosophy is you have to know what you're investing in and understand what you're investing in. A lot of times people, they panic and sell out because they have no idea what's going on. And I mean, that's why it's so important to hire the right financial expert so they can guide you through those tough times.
I think one of the issues is there's a lot of news. People, I mean, look at the noise. We're all scared when we hear crap going on in Washington and Europe. This Brexit thing is a big head scratcher unless you're at the tip of the spear like I am every day, like Kyle is. We understand it completely. But the millennials are suddenly, oh my goodness. Now, one of the things you brought up when you were on the air here is millennials voted, millennials didn't even show up to vote, right?
They did not show up to vote.
In London. Talk about that a little bit.
Yeah, so I mean, of course they took to their favorite social media platforms to say, hey, we want to remain in the EU, but 20% of millennials did not show up to vote. And I don't think you have the room to complain.
That's symptomatic of this country too, though, right?
Yeah. But I mean, it's the big thing. You got to understand what's going on. You have to do your research and vote. You have to do your research and invest. You have to understand what's going on in the world around you.
The interesting part, we just talked while you're doing this. So if you have no money in the bank, you're 25 years old, you want to retire at age 65, and you have an 8% return on investment. Now, you guys are money guys. 8% super conservative, right?
I'd say super
I wouldn't say
conservative,
super
reasonable.
conservative, but I'd say reasonable.
Okay.
Yeah.
If I'm counting on 13%, I'm probably smoking something. 6% is a little too safe. 8% is realistic.
Over the long term, yes.
You'll have $1,473,423 if you start at age 25 years old with zero money in the bank and only put $150 a month away for the rest of your life. In other words,
in a tax-free account, correct?
That's up to you guys. You guys are the smart guys.
Right.
Okay?
Yeah.
But,
right.
Now watch what happens, though, if you keep that money, okay, and you don't retire at 65 because debt is the new 80, right? And you retire at age 75. Your new retirement amount, after just 10 years, turns to $3,508,000. This is the time value of money. So in just 10 years, you've gone from $1.5 million to $3.5 million.
Yeah, and I think you're going to need that $3.5 million when you're retiring because I mean we're living longer. I mean my generation, we're going to have to work until 75, I believe, because I mean we're going to be able to work till 75. Well,
some of us want to work till they're 75. I honestly, you get to the point where I don't know what I would. I tried to retire one time. It lasted, honest to goodness, 4 months.
4 months?
Couldn't
get bored.
Can't do it. I can't do it. I got so much stuff going on. It's just more fun.
Sure.
And I think that's why I say, Kyle and Chase, if you are 55 years old right now and let's say you had $25,000 to your name, which, by the way, is the average amount of investment capital that a 55-year-old has, and you go from zero to let's say an 8% return on investment. If you want to have $1 million in your account by the time you're 75, you will have to you'll have to fund in the next 20 years for you to have $1 million in your account at 9%. You're going to have to figure out a way to put around $7,500 a month away. That's a lot of dough.
That's a lot of
Okay?
That's why you gotta start young.
That's a lot of
of
catching up
dough.
to do. Now, if you're that guy who has $100,000, okay, $100,000 in the bank, and you will still get that 8% return, and I just use a standard calculator. You can get there by putting $3,700 away. That's the difference between having $100,000 in the bank and having $25,000.
It's half.
Yeah.
It's half. That's half the money. Isn't that amazing? And that's that's by the age of 75 years old. So if you sort of think in terms of that's what I got. Now, if you have not started and you are in your 30s and 40s, it really tells you it's time to start, right?
Definitely. I mean, that's the biggest regret out of anyone that's retired. Not do what you love. It's actually quite interesting. The biggest regret is I should have started saving earlier.
Right.
So it's definitely, and also don't try and time the market because a lot of times
Yeah.
you have no idea what's going on. I mean, this whole Brexit thing, I think that is a great, piece of proof for the millennial is things can turn around real quick. Everyone thought, oh my gosh, the sky's falling out. Britain's leaving the EU. Well, the market recovered 80% of its losses within 2 days, I believe.
Yeah, and that's a good part. Chase, thanks so much. We'll see Chase again here this week.